Thank you for joining me. I mean, there's a lot of talk about whether or not we've hit the frothy top, that maybe everything needs a breather, take your profits. Or is it, hey, this week was a little bit of a pullback, step in and buy? Where are you standing in this?
I think right now we're at a pivotal moment in the market. We're up roughly 45% off the low. We're roughly flat to slightly positive year to date, which has been pretty damn remarkable given the face of COVID-19. The way we're looking at investing right now is we're picking levels for when the market pulls back. We think anywhere from the 2,800 to 3,000 level on the S&P 500 is probably a good time to start allocating capital. Have your watch list of names and sectors you want to buy. We'd probably say right now 5 to 10% cash to be on the sidelines. So when we do and get that inevitable pullback, you have money to put to work.
I see. So you just wait for a little bit more of a pullback because, when we're at 3,200 here, you're looking more in the 2,800, 2,900. I guess you're under the 3,000 definitely to step in and pick up some of your favorites. That being said, I thought it was very interesting how Leidos, this LDOS is one of the names that you like. This is all about science and technology pertaining to our own national security, which I think is very interesting. Science and technology for national security, Leidos, LDOS. Tell me why you like that one.
There's a few reasons why we like Leidos. So the first reason is it's the largest government IT provider to the U.S. government. They generate roughly 85% of their revenue from the U.S. Cybersecurity is not going to go away anytime soon, and it's probably the biggest threat to the national security of U.S. citizens. So that bodes well for Leidos. There's a lot of room to continue to work with the government across the different bureaus. And also they have about 25% exposure, 20-25% exposure to healthcare. And given the COVID-19 pandemic, not only the government is going to spend more money on healthcare, but also other companies, the healthcare system in general needs to be redesigned to be able to handle things like this in the future. So that's another growth avenue for this company. But more importantly, it sits in tech, which is the right sector to be in, and it's relatively cheap. It trades around 15 times next year's earnings, which we think are highly achievable, and it offers you a different way to diversify from the clouds and the chip makers.
It's amazing how it went from its high. I mean, I went back on a 3-year chart, but I had looked at another chart over a longer period of time. It really is an incredible chart. 125.84, right before the big sell-off began for COVID, and then it dropped down to 68. Now it's at 90. Do you think it could go back and retest its highs at some point?
We do. So this was a watch list name for us. When COVID hit, the initial sell-off, so we were buying down in mid-March, and then we recently doubled up our position probably about a week and a half ago when we bought somewhere in the 80s. We think the growth trajectory of this company and the valuation that it's at can definitely move to the 100 plus level as the next few quarters play out. This company's been slowly acquiring other smaller IT companies that they're from an M&A standpoint that continue to bolster their suite of offerings that they can offer the Department of Defense and the VA and so forth, that will likely result in them gaining bigger and bigger contracts as those come up for bid.
Yeah. I know that you have a lot of things that you put in your notes to talk about, everything from COVID to earnings season and the election. And without getting too much into politics, I care more about the markets and folks' money here. Tell me about the policies. You have some ideas pertaining to the election, saying that the election equals policy matters from market fundamentals. Can you explain that to us?
I think this is one of the most drastic elections we have coming up, where we have Trump that is pro-deregulation, cut taxes, while Joe Biden on the other side has been pretty adamant that he's going to raise taxes, and the market's not really discounting his ability to, if the Democrats do sweep the House and the presidency, you're going to have essentially a flip-flop of what happened in 17, where the stock market essentially took off, right? His whole policy that he's released is a corporate tax rate that goes up to 28%, I believe we're at 21, and taxing dividends at a higher level. So maybe that takes the luster out of stocks. And where the street consensus is at right now for, I think, 163-ish for next year's number, that doesn't factor in that the tax rate goes up. So that could be a 10 to 20% headwind to the EPS number. And I don't know if you crank up the multiple expansion that we already got it even more this year, and you can get to a higher price target, right, for the index. So at the end of the day, we have two conflicting parties, two conflicting views that their policies will drive long-term economic fundamentals, and that does matter for stock investors.